Hello folks, it's Saturday, October 25th, and this is the weekly market analysis video from Craig, the options linebacker. I'll start out this week by looking at the big caps, or the Dow Jones Industrials on the left-hand side versus the small caps of the Russell 2000 on the right. I like to see where the money's going right now, and as you might expect, the Dow's actually holding up pretty well right now. It's still holding within this consolidation pattern, as obviously the Dow stocks are more defensive or safer places for investors to be versus the relative unsafety of the small caps of the Russell 2000 on the right. Now there are some subtle differences here. Again, the Dow is showing that the price is still holding up within this pattern. A lot of tails below here, which can be bullish in this environment. Looking at the Russell, a lot of tails here still, but the price has actually fallen out below this pattern. Now the other things that we're seeing is that the Dow is down for the whole bear market is down 41%. And it's showing that some pretty strong support from the 2002 lows is not that far away, maybe another 1,000 points or so, and that's maybe a 2-day trip with the volatility lately. However, looking at the Russell is down now 45% for the whole bear market. And if support is down here at the 2002 lows, that's a long way away. So I don't expect it to make it on this next move, because right now the Russell 2000 is a little bit more fragile. However, down the road, I expect the Russell 2000 to eventually lead the market out of this bear market. Now let's zero in on the proxy for the whole entire stock market, which to me is the S&P 500, and let's see if we can figure out which way this thing is going to go from here. Here's the S&P daily chart, and it shows that just about all the action that has been comprised of this entire move down here has been underneath the 38% retracement of this move, which is pretty normal. So as we've tried to bang out a bottom down here, unfortunately on Friday what happened was the price fell out of this consolidation pattern, which might be bearish. So looking at all the clues, the question is this thing done? Have we hammered out a bottom for now? And is it going to reverse and go higher? Or is the price going to come down here to the 2002 lows and test those? Well, let's do a vote. Let's determine, based on the evidence, whether or not it's bullish or bearish. So first of all, let's make the case for the bullish vote. In other words, we found the short-term bottom and we're going to bounce higher from here. Well, the first evidence of that is the VIX itself. The fear gauge here has spiked yet again, and it's at an all-time high. This is absolutely unsustainable, and you can make the case that this is going to mark a short-term bottom or a high in the VIX. The second piece of information for the bullish camp is just to look at the chart. For all the bad news and as for everything that you're reading about every day in terms of credit crisis and what the markets are doing and just this global meltdown that the entire world is feeling, this is it? This is the worst that it can do? Is just sort of put a bunch of long tails in on the daily charts? Surely this must be the bottom. And everywhere that we look on our indicators, such as this, the RSI 14, all we're seeing everywhere is completely oversold readings and bullish divergences everywhere. So as the price makes lower lows, the indicators are showing higher lows, bullish divergences. So that's the bullish case, that we've found a short-term bottom and prices have nowhere to go but up from here short-term. So now let's hear from the other party, the bearish vote, why this chart is heading lower from here. Well guys, this one's pretty simple. Just looking at this chart, we're in a downtrend. We've done nothing but make lower highs and lower lows, and then on Friday we made a lower low, and the price has fallen out below this most recent breakdown line below S&P 900. Whenever there's a question, price is always king, and price right now is telling us that we're in a downtrend and to expect lower lows from here. The other vote in the bearish camp is that in a bear market there's really no such thing as support. But if there is such a thing as support, it may be found at these 2002 bottoms. So we're only a 2-day trip away from the 2002 bottoms. So it's hard to believe in the bearish camp that the bears would push it all the way down here and not finish the job. At least put in a short-term bottom by retesting the 2002 intraday lows at about S&P 769. So now that we've heard from both camps, what do I think personally? Well, when it comes to a toss-up between indicators and price Price is king. Price will always win. And because of that, what I think is that we need to at least take out these lows down here. So we will make a lower low, even if it's intraday, even if we don't come all the way down to the 2002 bottom, before price can potentially break above this 900 level and at least put in a short-term lower high, which will give some relief in the market. But I don't think we'll be trading above S&P 1100 for some time to come. So those are my thoughts. Let me know what you think, and I'll talk to you again next weekend. Take care, guys.
You hear me, the sound of my voice. I am here to tell you I have made my choice. I've been